Welcome into the Crypto Bunker podcast. Today, I want to address Bitcoin. Is this the Bitcoin top? Has Bitcoin topped? Um, I think it's possible that it has. I'm going to get into why I think that. Um, Actually, I'll just read something that I tweeted recently. Um, so I tweeted. Bitcoiners who cheered on government spending and rates moving higher are about to see how correlated it is to rates and government spending. Rates down equals Bitcoin down. This isn't a QE environment either, it's just fiscal responsibility. Bitcoin has acted as a hedge to government spending and bond market losing stability. That is great, but under Trump, those things might change, and they look like they will change, especially with Scott Bessent saying he wants to have rates come down. Um, and so we'll see how that works out. With AI proliferation and job losses from government cuts and cuts from large corps like Meta, Salesforce, Amazon, Tesla, et cetera, that is deflationary. Technology innovation and AI is also deflationary. We also have an emerging technology in AI that is basically going to be smarter than all humans. It is going to demand, in some senses, more energy and more data center space. I don't think we know exactly what that will look like, but Bitcoin is in competition for that space and for that energy. So is it in the AI's best interest, if it has a best interest, if we sort of lose control of it, right? Which is somewhat very possible at this point. And I think we have bigger problems than just Bitcoin if that happens. But my point is, if we lose control of it, and we have, emergent properties of intelligence, you know, the AI's best interest is really to have Bitcoin price go down. It's not Bitcoin is also because it needs more data center, more space, and more energy. Bitcoin is also not a place where AI agents and it's not Web3. It's essentially a digital property scarcity asset. It's not going to be the internet of, tokenization. That's not going to happen. So any Bitcoiner that's telling you that, they're delusional and they're a Bitcoin maximalist. So Bitcoin also in the past 4 years was helping green energy agendas by buying that unused energy from the grid. So when wind power places and they were losing money because the grid didn't need them, Bitcoin miners would then buy that energy from them. And so it was actually helping to proliferate green energy. But now green energy is shut down. From Trump. So not only that, which I didn't even tweet here, but now there's going to be much less unused energy. And so like a lot of that energy is now going to be siphoned towards AI instead of Bitcoin miners. So Bitcoin miners in that case, they're not as needed. In fact, they may be not wanted in states because states want to promote AI potentially. So these are just a few bear cases. So I just talk about how I think we could see a major crash, but probably we still get a higher high eventually. Let's dive into the charts and see where we're at. So we did have a major reversal candle again today. So Bitcoin continues now to make lower highs basically. So we continue to see lower highs. I'm not sure and the thing is we see all this good news, right? So when you see good news, bunch of good news happening, ton of good news. Trump launching an ETF, Trump buying Bitcoin, Trump's son telling you to buy Bitcoin, buying ETH, tell you to buy ETH. Price continues to go down in that case. So what is that telling you? First of all, it's telling you maybe the market doesn't care. Or maybe it's telling you that was already priced in. Or maybe it's telling you there's something bigger on the horizon. Potentially it's telling you that there is, more of a macro shift happening. And what is that macro shift? I believe that that macro shift is rates. Okay. I'm not sure if I have it on one of these, but I can pull it up. Okay. But basically, what I think is happening is that the 2 year, or you could even say the 10 year, but we'll look at the 2 year, and we can say that yes, it is up today, which is interesting. But let's take a look at this compared to Bitcoin. So let's just take this. And some of you may already be recognizing this pattern. It looks similar to Bitcoin's pattern right now. And so Bitcoin has been very correlated to rates. Okay, this is not the rates chart that I just had pulled up. This is the Bitcoin chart. It looks exactly the same. Now, I'm obviously going to adjust it because Bitcoin's more volatile. There's adjustments that have to be kind of made, but it is the same chart. But it also trades at different hours, so you have to like sort of factor that in as well. But it basically is the same chart. You can see it even has this, it has the moon, it has this little thing, it goes up, comes back down, up, down, and now it's consolidating. Now, so what I think is happening basically is that Bitcoin has become a hedge for bonds, right? So it's a good thing. That's a good thing, like I said before. Um, but what happens when bond yields go down and we're not getting quantitative easing? We're just going down in a sort of deflationary and slowing growth scenario. We obviously have also equities continuing to make lower highs as well. And so this is the third lower high and third another rejection here. When we look at it on the longer time frames for equities, we have a major double candlestick plus reversal indicator. We have sort of shooting stars here. We look on the monthly, which we will look at Bitcoin in a second. Let's just take these drawings off. What you can see is this is a major reversal candle here on the monthly. So this happened in December. Basically, all of December's gains came all the way, or December 2nd, I should say. So right after, sort of right after Trump's election, we had a major top. This is a topping signal. Now, obviously, the reversal indicators didn't pick that up, but this is a classic gravestone doji. And some of you may recognize this candle from the ETH chart of the 4850. That was the top. We still have not breached that, many years later. So we see some rejection here for sure. And stock market can be tricky. Obviously, these are not doing the same thing as that. But on the Qs, sorry, this is a monthly chart. So this is actually all of December. So that's actually one of the most bearish monthly charts I've ever seen in terms of the gravestone. Now, there's actually, we could try to even find a similar one. This is actually, it's funny because this is the same thing but flipped, right? But this is called a dragonfly doji, and those can also mark tops, but they definitely mark bottoms more than tops because you can see that the dip was bought. But gravestone dojis can also mark bottoms, but they can also mark tops, and more likely than not, they mark tops. You can see some action here. Could this be a similar scenario? Potentially, because this is what the market did when Biden was just getting in. So it was very volatile. I think it could be similar. We could get a quick, sharp drop for February and March, maybe beginning of March. You can see again, we had a dragonfly doji for this top for the Qs. We had a dragonfly doji for this bottom for the Qs. So the Qs, another dragonfly. The Qs likes to use these dragonflies. Um, there's also a sort. This isn't a gravestone, but there is a big doji there. But the one that just happened is honestly one of the worst ones that you can. I mean, that is a perfect gravestone. Okay, so we'll go into that, and let's look at crypto and Bitcoin now. And now Bitcoin looks like it wants to put in another reversal indicator, which is very rare. And it did happen back here, but it didn't happen with the candlestick reversal. Okay, so these have not happened very often. They do not happen very often. Yes, they did happen in the bull run of 2017. So yes, that could happen. But what I'm saying is I have been degrossing my position just kind of continuously over the past couple weeks. I'm now in a position where I'm actually like 40% Bitcoin, maybe 60%, and I'm actually shifting that 60% into bonds, which sounds crazy. Everyone's bearish bonds, right? So how could I be bullish on bonds? I already went into the process of why that is the case in my earlier tweets. But I will say, to me, I've always kind of drawn this as a head and shoulders. I think it's still a head and shoulders. We have a shoulder here, the head here, and now this shoulder, and we're breaking down through the shoulder. And I actually drew this whole thing way back in, maybe a year ago or something, or whenever this like sort of started. Maybe not a year ago, right? Maybe 5 months ago. Um, Feels like a year, right? But this is basically the neckline of this head and shoulders. So what we can say is the neckline, when you have a head and shoulders, you just want to take it from the neckline down. Now, you could say, do we already reach it? Not really. You also could take this as like a bear flag, or a wedge, a descending wedge. So you take this line and you just move it to here. And really, we're getting the same target, which is around 3.2%. Now, 3.2% from here is like a 25% gain. So that's a pretty big gain. And if you see a Bitcoin drop by 25, 30, maybe 40%, and you have a 25% gain in your bonds, you're then making a huge return. If you want to put that back into Bitcoin, you're getting more Bitcoin for your buck. Because I was in Bitcoin from basically October 2023 to now, I feel comfortable taking major profits here, even though it's not, exact. But yeah, I was probably in it since around this area when it popped through all the weekly moving averages, as you can see. Now, we do cover that a lot on this channel with the moving averages. So basically, yes, usually you would not sell in a bull run until you break the 20-week and then you come back and you test it. Something like around here. When you broke the 20-week, yes, you could sell, or you could sell when it came back up. But at that point, you're going to be around like 87K, something like that. So it's not going to be as good a return. Now, could it go back up to 110K and then go back down? Yes, it could. None of this is financial advice. None of this is perfect. I also talked about Tau last time. It doesn't look like it's really bouncing like it should have. This is not a good looking chart, but it did get support at the newly minted 100-week. So it has been around for a while. It's been around for, over 2 years. And, actually, it's really been around for longer than that. But since it sort of was launched on the open market, it's really been, a few years. But it's getting dicey, I mean, even the Tau ETH chart not looking good. But I am hodling Tau. I will tell you that. So Tau to me is like a 5-year investment, at least 5 to 10 years. It's a venture capital investment, and it's basically betting on the world web of AI. You can look at Barry Silbert and what he tweeted today regarding Tau. So he basically said that um, he basically was talking about as our efforts expand over the years, BitTensor is a project that appears to be approaching escape velocity and capture my attention following our initial investment in 2021. BitTensor is a decentralized open network where anyone can create, train, and access AI, made possible by BitTensor's token Tau, which shares the following attributes with Bitcoin. Set cap of 21 million coins, halving every 4 years. BitTensor stakeholders are rewarded Tau for their contributions. No venture capital rounds, no ICOs, no allocations to team or advisors. Fair launch token from white paper. So you could say that he's saying that, how do I explain BitTensor? He's saying, I think BitTensor is the best described as the World Wide Web of intelligence, global connected network where anyone can contribute, connect, and innovate freely. Just like the World Wide Web provided for open access to information, BitTensor provides open access to intelligence. In the case of BitTensor, this access is achieved through something called a subnet, which you can loosely call compared to a website or application. There's 64 subnets, as many of you might know. And basically, he believes there could be thousands of subnets similar to a Cambrian explosion of websites that occurred after the launch of Mosaic's Netscape browser in 1994. He says, yes, I think we're sitting at a similar inflection point for AI thanks to BitTensor. So this is a massive, massive invention. The UMA consensus, all these things. Huge, huge invention that they have solved here with Tau. But it doesn't really matter. Like the price can tank. To me, it does seem pretty low at this point, but it's been lower before. So, you could think of Bitcoin as, okay, Bitcoin crashed like when it was first topped out. Didn't it crash like 95%? I mean, that's what ETH crashed down. So you could look at that if this is a bear market, right? And we could crash, something like all the way down to the bottom of this chart. We could crash to $35, like literally erasing everyone's capital. I mean, that would be insane, right? It could happen. So, if you have 11 Tau right now and it's $3,700, which is what I have, and it goes to 35, you have $370. I mean, think about that. But if you don't sell, then you never are taking that loss. So you're basically, it doesn't really matter. So that's kind of the mentality I'm trying to take. I'm not the best at doing this. I did lighten my position a little bit, and kind of paid off some debts and stuff like that, because when you're going into a deflationary environment, you want to pay off your credit card debt. If you're sort of leveraging your credit card to buy more crypto, which I've done in the past, you definitely want to start paying that down. So that's kind of something I've been focused on the past maybe 2 or 3 weeks is, selling some ETH, selling some Tau, paying off the credit card, trying to get myself to a point where I actually don't have debt, pretty shortly here. Um, and, and then if we get a major, major crash, then it's time to start, leveraging up again, maybe, because rates would come down and things like that. Not encouraging anyone to leverage or anything. But yeah, so we could also look at ETH. ETH is really struggling. ETH is in a full bear mode. And it really looks bad for ETH. So ETH is something actually that I've completely capitulated on. I apologize. I know that I talked about how I thought the chart looked really good. I'm a trader. I can, change my mind. And I actually shifted it into Tau, which was like even worse decision. So, but I sold some of it as well, like I said, just to pay off some debts and stuff, because honestly, again, I mean, let's say this is a full-on bear, or let's just say it is not a full-on bear, but it is a correction similar to back here in 2021. that went down 60%. Okay, so let's say we get a 60% correction, which actually looks pretty right on, would be around 1600. Now, if we look at the monthly moving averages, we can see that we are now at support, but the next one down is, of course, going to be probably at that point right around this mark. So to me, getting ETH back at its high in, basically, you get $1,600 ETH, it's looking more and more possible that this could happen. Um, if you actually do get that, it's a major buying opportunity. A lot of capitulation, a lot of leverage. People tend to leverage in these environments, and what we've seen is that every single time that ETH has gotten down to these levels, it's been picked up at the 200-week moving average. It's a very strong average. It's literally been picked up there every single time. If we lose the 200-week, then you need to look at that next level, which we can say is around probably around that level there, 15, 20, something like that, right around that old all-time high. If we lose that thing, I just don't think that can happen at this point with how bullish everything is fundamentally, which I think it still is, for the future of tokenization being on Ethereum. It's battle tested. You could say that, yeah, this maybe it was a double top. Maybe that's really what it was. And if it goes down 60% from here, you're looking at a $150 billion market cap, something around that, maybe even less, $140 billion market cap. At that point, that's some real value. That's something I would consider taking some chips and really, really going heavy in on that. At that point, it would be hard to do. But to me, even being a validator, like how much does it cost at that point to be a validator, right? So you can start thinking about those things. You can thinking about, maybe getting 16 ETH or something, right? At that, and if you can find some money to do that, it would cost $24,320 at that point to have 16 Ethereum tokens. So just something to think about, maybe starting to cash up a little bit so that we can, have a chance. But let's see. So this is the 10-year. This is what Scott Bessant mentioned as the most important rates to get down. So he's going to be working hard to get these rates down. And I trust that he will do that as one of the best macro investors, sort of all time. He's up, he's not really up there with George Soros or Stanley Druckenmiller, but he did work with them. And you could say they like manipulated stuff. I get it. But yeah, I mean, we could look at the 200 week really for a target here. I mean, how nice would that be? Getting back to some semblance of reality. Maybe you get a 6% mortgage rate at that point, right? So this is something that the American people need. The American people need this to drop down to these levels. Let's see if we can get a monthly level, because these weeklies don't. Yeah. So yeah, the monthly, I mean, it's funny because sometimes when you cross bullish, right, fully bullish can be actually a top signal. So right when we crossed fully bull on the moving averages, to me, this looks like a monthly top. So what we saw in the NASDAQ before, we're now seeing here on this gravestone doji on the 10-year. Plus, what you can say is that when you have a trend line and you're bouncing and then you go through the trend line and retest the trend line, usually you will then come back down for that. So yeah, that's basically what we have here. And so, that has happened. Now all we need to have happen is to lose the 20-month, and then really, all of a sudden this is in play, this low here, and then we're starting to really get into some good territory, some healthy territory. And I believe that stocks have become correlated to rates in the opposite way. So stocks are going to flow out of the, money is going to flow out of stocks into bonds. Now that has already started to happen in these major movers like Microsoft. So when we look at Microsoft, we look at major monthly rejections here, multiple and major monthly rejections. Okay. We had a doji here, which marks the top. We have this top that's a perfect gravestone, another top here. This, I mean, look, the, you know, you could say, yeah, Trump is kind of like a pump-a-mentals guy. Like he's very like pump and dump sort of vibes. I don't really like that. I don't think I think the market is not adjusted to all these government cuts that he's made. I don't think, I mean, talk about having a wide moving average. I'm not saying that this thing ever changes because Microsoft never does. But maybe we come back to, some semblance of reality here too. I mean, I don't know if it can touch this again, this weekly moving average because of AI and everything. Maybe we get to the old all-time high. I know that seems like kind of a major correction, but not really from here. At this point, that is a nice buying opportunity. So we need to start thinking about, can we get in position to start buying some of these because we know that the future is going to be, massive AI technology advancement. Now, will that always be associated with, um, will that always be associated with stock market going up and up and up? Maybe not. Maybe not. Because, everything crashes to zero when, um, all prices crash to zero with proliferation of technology. So all the inflation hype, I think is like if you look at the RSI on inflation, which I'm not sure there is one. There actually probably is. That would be something cool to look at. Let me see if I can pull that up. But I bet you that it's like just continuous lower highs. Let's look at the RSI for like a lot of these things. For monthly, continuous lower RSIs for Microsoft. I mean, with the strength in these moves, I mean, for goodness sake. We also see rich people trying to pull their gold out of physical. They want it in their own possession. They're trying to pull it out of the Bank of England. Bank of England doesn't have it, and so that's been a huge, big havoc that's happening there. Now this thing has reset pretty good, but to me, this is just a flat. It's waiting to just kind of dump out the bottom here, in my opinion. Now, let's look at Amazon. Again, this high is a lower high in the RSI. It's not that bad. Meta, massive blow off top, lower RSI than this high over here. Same thing as this bottom, right? So Facebook and Meta, they marked the bottom of the 2022 November crash. Now, are they going to mark the top of the February 2025 top? Is that possible? Now we see that this had a lower RS or a higher RSI marking the bottom. Now this has a lower high of RSI and a higher high in price. So does that mark the top of that potentially? We see in Tesla that you had obviously lower RSI on this high here, and now we're coming sort of off of this. And I think Bitcoin's very correlated to Tesla, or maybe Tesla's correlated to Bitcoin. I don't know which one. And then we also see NVIDIA that was putting in many sort of weird candles and sort of weird patterns, even being up like, hugely from that crazy crash. It's still very much lower RSIs. I mean, we're talking about, I mean, check out this. We're on the lower half of the moving average of the RSI. So let's now look at crypto here. It's really not looking great, to be honest with you. But yeah, we see a lower RSI big time. on this 110K candle, we saw a lower RSI here, and it actually was below the moving average as well. So monthly wise, I think we are sort of okay. We're okay on the monthly, not really a huge issue. Um, so yeah, we could look at ETH real quick on that. Obviously, ETH has kind of been a joke, so um, I'm not sure exactly about that. So we could also look. Oh, I was going to look at yeah, I wanted to see if I could pull up inflation. I don't know if that exists. Okay, United States inflation rate. That would be cool to have. That would be sweet. Um, okay, so let's look at this on sort of like a, can we look? Okay, we can't. So it only does weekly. We can obviously see, let's see if this, I don't know if RSI works for this, right? Because it's just like a measurement. It's not actually people trading on it. But we do see the RSI, massive here, sort of weak here. I'm not really sure what this is supposed to mean, but we can see the trend of inflation has been coming down. So will that continue? Maybe. Maybe we can even get, if we get a bad enough economy or whatever is happening, maybe we get some QE for once because we haven't had QE in a while. And this didn't work this time because this is every time this thing goes up to zero, it's supposed to work. This is the 10-year, 2-year spread. Didn't work. I believe the dollar is topping out here. The RSI is very weak. This is the chart from 2017 when Trump took office. This is a very bearish, which means usually when the dollar crashes, rates crash, stocks crash. It's like all correlation to a recession. We also have the TLT, which you can look at here, making a higher low on the RSI, as well as putting in a candlestick reversal on the monthly time frame. So the monthly actually looks really nice here. We see again a doji, which is a dragonfly doji, which means this got bought up, and potential, I believe, for a pretty good rally. Like I said, maybe 25%, maybe somewhere up in this range, up sort of not maybe that high, but like 112. We can look at the weekly, maybe hit that 200 week. It's a decent rally. It's like a 20%, 25% rally that I think we could see here. Markets aren't going to like it. Crypto is not going to like it. We're used to a move index volatility on the bond market that is actually I'd be interested to see this bond index. So this is the volatility for bonds. Are we seeing the strength? Okay, so again, it's not exactly really something you can measure because it's not exactly something people are trading on. I mean, that's just not how it works. It's tracking something. But you could say there's higher lows of the RSI. So maybe we are due for a little bit of volatility. I don't really know what happens when like bonds go down in terms of volatility. I guess actually it looks like it goes up. Well, that was COVID though. So we'll see what happens. But hopefully you got something out of the video. If you did, please like, subscribe, and have a great rest of your day and great week.